Well, happy Sunday, everyone. Hey, it's Shooter. Welcome to Swing Trade Notes. Of course, at the end of our presentation, please do review our disclosures. Let's jump right into this. We saw dip higher continually throughout the week, especially on Thursday and Friday morning. But as long as microchip stocks sold off, I think that's going to continue. I have another leg lower on SMH, which I published, I think, in the freebies section here on fundamental trends for major markets, if somebody would like to review that. But there's a number of stocks that are sectors that need to catch up for us to get ahead here. And I'm thinking we're definitely still short-term bearish to bearish, and realize because we break below that 475, it really opens up an extended lower low around 425 in the S&P. So, with that continued effort to buy the dip, the buyers just got run over by the sellers. I mean, there were that many of them there. So from that sentiment, unless we get a decent rally Monday or Tuesday, we probably will continue for a lower week. Now, one thing that was different from the prior week is NASDAQ led mainly by microchip stocks. And the S&P came in second, the Russells were third, and then the Dow actually showed some relative strength. So we're still seeing a little rotation. They're trying to find some names, and that was the challenging part about the stocks that I picked out this week, is there were very few names that were solid through the whole week that still had enough upside to chase. As the saying goes. But, the dollar still remains a strong risk aversion. Now, one thing that happened last week is we had the Fed's, dollars in circulation. We had the largest decline in 2024. And I didn't go back and check and see if it was in 2023, but it was a pretty big number. Caught my attention. Now, that was overshadowed by the conflict between Israel and Iran. So basically, nobody looked at that. So if they're pulling funds out to slow down the market versus other means of quantitative tightening that they're not announcing, we should see that continue, and that will continue to slow us down. Now, oil was continually volatile most of the week. Gold and silver were still a safe haven. And I would even say that Bitcoin, through the halving here, just how well it's held up, has also been sort of a flight to safety as well. Now, Bank of America, Goldman Sachs, exceeded expectations in earnings. However, they struggled to maintain the gains and continue that next leg higher. Now, Netflix was positive, but they just got pummeled for not having great guidance regarding the sales growth relative to converting multiple users to new users. Now, my perception here of Mr. Market is that equities retreated as higher yields outweighed strong Goldman Sachs earnings and hot retail sales data. So, we sort of have this battle going on between the bulls and the bears, and it's happening in different places. But continually, the bears, at least last week, won. So now, another point, too, is the 10-year touched its highest point since mid-November. The root cause of the sell-off or a secondary manifestation? I'm going to say that the withdrawal of funds, dollars in circulation, probably had the most significant effect, besides us waiting to see whether or not Israel was going to respond. So between those two, I think that was the collective issue. And I think the 10-year Treasury was in third place there. That's my 2 cents. Right or wrong? Now, investors will be closely watching the major fangs this week. I'm mostly interested in Microsoft and Meta. However, it's challenging for me to chase them off that FOMO into this kind of environment, especially with how the banks, Morgan Stanley, Bank of America, Goldman Sachs, and Netflix responded last week. So basically, they all got a little pump, but they couldn't hold it. So that's very challenging to chase, because in this market, you can't get out of your options in the opening range because there's not enough volume there. We're so shallow. So looking at the dollar here, I think our concern is that we break above 106, head towards about 108, where Kirk's number is. If we do that, I think we have a much more significant drawdown, right? All right, now, TLT, we're getting really close, 86.51. I mean, we're at 88 when I printed this, so that's probably going to come into play this week, so we're probably going to try and get an entry there, just sort of making everybody aware of that. Now, I like XRT. The reason is because I think they've gotten beaten up a little bit, especially in the last 2 weeks. Not only that, they're at the third standard deviation on the low side, and it sort of looks to me like it's grouping towards a push to the high side. So I think it's a 50% back candidate. So that's 74.22, even though the target I've got it 75.72. Forgive my voice, it's going to get hoarse here. But I'd start taking profits. Let's say, for example, if you come in at the 69 and you buy 72, 73 calls, or 74 calls even, or even 75 calls, it's really up to you. I'd do May's, the monthlies, and then I would definitely start trimming at the 74.22. That would be my thought on that. Now, obviously, if we break below that 69.33, if I haven't posted an updated chart, please go into chat and ask me to do that, just so I keep tabs on that. Now, I like American Express for continuation here. So I'd like to come into Monday morning in the opening range and see it back off a little bit, but I don't think it's going to. I think this is just going to shoot right out. Now, realize our 61.8 and 78.6 is up here. So you realize this whole box, this golden box, is a potential candidate. So a shallow breakout should take us to about 240. But I'm going to say this, don't be greedy in this market because it's just as likely to come off as it is to continue there. So I'd like the May 240 calls. They're about 284 a contract. All right. Now, Clean Spark is my third pick because it's also a breakout candidate and a gap fill candidate here. However, our target is up around 2051, where our 50% back is about 1921. Not as deep as I like in a trade, but I'm trying to go with things that I have some pretty solid conviction that we're going to see some continuation. Basically all last week as the markets draw down, what did Clean Spark do? They continued to rally. Okay, now we're flagging. That's the main reason I like this one. So now Clean Spark, I like the May 21 calls for $1.55 a contract. So again, don't be greedy. Take profits around 2050, or run a very tight trailing stop once we get up to that number. So that's what I have for this week, folks. Great trading. Until next time.